Welcome to our Market Narratives series. I'm Julia Newbould, Managing Editor at Conexus Financial. Today I'm talking to Richard Bullock, Newton Investment Management Senior Geopolitical Strategist. Newton Investment Management is a global investment management subsidiary of BNY Mellon Investment Management based in London. Today we're talking about geopolitical issues. Richard, as a geopolitical strategist, today's environment must seem like one you've been preparing for your whole career. We have war, a change in world order, a move towards a global energy transition, and the emergence of a new financial system across various economies. It's difficult to know where to focus first in this great time of change, but let's start with the one most of the news bulletins continue to focus on, the Russia-Ukraine war. It's now well past the 5-month mark, and perhaps has been going longer than many of us expected. Richard, how has our thinking and actions changed during this time, and what does the ongoing war mean for investment markets and world economies?
Indeed, the world faces more crises and challenges than it has done in a long time, including the pandemic, supply chain disruption, inflation, and the war in Ukraine. And clearly very few people, if any, expected at the start of the year that Russia would invade another European sovereign country. But if that was a surprise, I think the next big surprise is how coordinated the Western response has been in terms of support for the Ukraine, for Zelensky, its leader, for imposing sanctions on Russia, and for the NATO collaboration and cooperation, which has led to new members even joining NATO or in the process of joining. So I think no one expected that. Clearly, the thinking around the European economy has also changed over the last 6 months, because the events in Ukraine have led to, or in the process of leading to, quite a large energy shock. And so that's something that investors and markets are preparing for. And I think that there's quite a high probability that the war in Ukraine continues for quite some time. And Russia's Foreign Minister Lavrov recently said that Russia's war aims have expanded. And immediately, after Russia invaded in February this year, and they went to the outskirts of Kiev and then retreated back to the Donbass, it looked like they would settle in and just focus on that area. But more recently, it looks like their intent to push on as far west as they can across the seaboard in southern Ukraine to try and take Odessa and effectively block off Ukraine from having maritime access to the Black Sea. That would seem to be their ultimate war objective. So I think that suggests that this conflict is likely to persist for quite a while longer. And another way to really view the events is to perhaps through Russia's lens, or through the prism that Russia looks at this, to think that this is really a war with Europe, because Europe is providing so much support militarily to the Ukraine, and the more they do that, the higher the cost that's being imposed on Russia. And the way that Russia can respond to that is through its gas tool and gas supplies. So we've seen the Nord Stream 1, the main supply line providing Russian gas to Europe, running now at 20% capacity, and likely to stay low now into the winter, so that Russia can really leverage this gas tool over the winter months and stop the Europeans filling their inventories up ahead of winter. And so I think this is something that the markets will focus on in the coming months more closely, as the energy security crisis that's facing Europe and the impact that that's likely to have on industrial production, as possibly gas supplies get rationed to the European industrial sectors. So that's something that the market will focus on, and clearly something that no one expected at the start of the year, that the European economy would be embroiled in a war in the way that it has become.
The war has obviously changed the global world order. with what you term autocrats versus democrats. Can you please explain a little on why this matters and how this affects those of us in the West?
Yeah, so one of the clear fallouts from the Russia-Ukraine war that we're seeing at the moment, and that I think we'll continue to see for coming months and years, is this almost decoupling or separation into rival camps between democratic countries and autocratic countries. Let me just expand a little bit on that. So clearly, as I mentioned, the war in Ukraine has led to the democratic countries being a lot more cohesive and cooperating more in terms of security, energy policy, sanctions on Russia, but also the autocratic countries, that they're sitting up and taking notice of how Russia's been targeted with sanctions, with its financial system being cut off from the global financial system. And I think the autocratic countries, clearly they're very much still prepared to deal with and trade with Russia, the Chinese, the Middle Eastern countries like Saudi Arabia, Iran, etc. So I think we're getting a pattern emerging in the coming years of these two camps. Now, I'm not suggesting that they become fully polarized like during the original Cold War, where they don't trade with each other. But my thesis around this is that they'll drift apart, and you'll see more confidence building amongst the respective members of the democratic camp and the autocratic camp, which means that they're more prepared to trade with each other, invest in each other's economies, etc., and really accept each other's currencies in their own exchange reserves, for example.
So discussions about China brings things a little closer to home for Australian investors. What should we be watching out for when it comes to China, and how might the new Australian Albanese government's foreign policy affect our relationship?
Yeah, but before I talk about Australia-China foreign policy, just a quick word on Taiwan, I think, is really valid at this juncture, because a lot of people are looking at China, Taiwan, thinking that perhaps there's an analog from Russia-Ukraine, that maybe the events in Eastern Europe could tempt China to invade Taiwan. So my thinking on this, and clearly right now is a very sensitive time, given all the speculation around House Speaker Pelosi possibly visiting Taiwan, her intended trip there would come at a very sensitive time for China, given that they're facing their political calendar with the 20th Party Congress happening later this year. So the question here is, would events in Ukraine discourage or encourage China? And I personally feel that they're probably more discouraging in the near term, because you look at how the Western response has been in terms of sanctioning Russia. You look at how Russia's economy has been de facto decoupled from the Western economies, save for the remaining commodity trade, and you look at the cost that's imposed upon the Russian economy. Forecasts for something like 10 to 15% shrinkage in Russian GDP. So I really think China is looking at this and wants to preserve trade with the West for as long as possible. Realizes that the damage of decoupling from the West would be too costly for its economy right now. And this happens at a time that China is obviously facing very severe domestic economic challenges with its real estate sector, and with its COVID-0 policy, which has curtailed a lot of activity in China. So I don't believe that China is going to be looking at Ukraine and deciding to make an imminent move to try and seize Taiwan. Yeah, so turning to the China-Australia relationship, clearly the relationship has deteriorated quite significantly since around 2020 under the Morrison government. But I think any change of government, obviously now with the new Albanese government in Australia, provides the opportunity for a reappraisal of relations, even if not a complete reset. So I think Albanese will look to soften tensions, but will not concede on core principles and values. And this is also the message that the new Australian Foreign Minister, Penny Wong, gave in a recent interview. So I think the China-Australia relationship will likely remain strained, but perhaps with more potential for dialogue. And so some things to watch for in the relationship. I would categorize them as one security thing to watch for and one commercial trade-related thing to watch for. So on the security side, something that's really been in the press and important to watch for is the diplomatic offensive that China's been on with the South Pacific island nations. And we saw it most prominently come to the fore in April when China signed a security agreement with the Solomon Islands. And so this is quite significant because when you look on a map where the Solomon Islands is and also the other South Pacific islands, they're very strategically located to Australia's northeast, and also form a potential barrier up past the eastern side of Indonesia and Papua New Guinea. So I think this is important because when you read the draft of the security agreement, it gives China and the Chinese Navy, for example, the ability to refuel and to make stoppages in the Solomon Islands. So it's something that should be monitored. And I think the motivation for the Chinese government here, for Beijing, is clearly their sense that Australia and the US are perhaps doing more with their own military alliances and cooperations around institutions like the Quad, the Quadrilateral Dialogue, and also AUKUS, the nuclear submarine initiative that was announced last year and includes Australia, the UK, and the US. So I think it's kind of clear that China's retaliating and pushing out beyond the first island chain there to try and have more of a strategic positioning. On the commercial and trade side, one interesting area to keep an eye on, I think, obviously the industry of iron ore, because iron ore is such an important industry for Australia. It accounts for about 25% of the country's total exports. And clearly, given the shape of trade relations between Australia and China right now, it's been no secret that Beijing wishes to reduce its iron ore dependency on Australia over the medium term. And is one reason why they're working on a big iron ore project development in the country of Guinea in Western Africa to try and over the medium term potentially back out iron ore purchases or some percentage of iron ore purchases from Australia. But I think one development that caught my eye recently was China announced that they're setting up a new entity called the China Mineral Resources Group, which is intended to be a cooperative buyer for China's steel industry to really, negotiate as one and have more purchasing power vis-a-vis the iron ore suppliers, which themselves are a very consolidated industry. And so this is something that should be monitored as well, because it potentially over time might give China more power around lower prices. And it'll be interesting to see how the big iron ore producers respond to this if they feel that they're being bullied into supplying iron ore at a price that's unfavorable or non-market related. But they're really the two aspects to monitor in the China-Australia relationship from my perspective.
Richard, does being located in Singapore change your perspective in any way?
Yeah, thanks, Julia. That's a great question, because one of the primary reasons that I chose to relocate to Singapore 4 years ago is because I could really see, and I think many people would agree with me, that the Indo-Pacific, the Asia-Pacific region is really expected to be ground zero for geopolitics in the coming years. And, we're seeing that with, the uncertainty around Taiwan, the tensions in the South China Sea, around China's 9-dash line, this great power competition between the US and China is really expected to primarily play out, in this part of the world. And so being based here gives me a time zone advantage, gives me the ability to kind of digest events as they happen. But it also enables me to, mix and meet with some of the movers and shakers in geopolitics and diplomacy. So just to give you a little bit of insight about my role, one of the areas that I like to kind of tap into here is the diplomatic community. And I'm very fortunate that in Singapore, there's obviously a very big, embassy, collection of embassies from countries all around the world have diplomatic representation here. And, I often try and meet with representatives as much as I can. And sometimes I'm fortunate enough to even meet with the ambassadors of some of the countries. And that really helps me to, get more of a flavor for the geopolitics rather than, just, purely see what's happening in the news or, getting takes on it from the corporate world. Getting it from the diplomatic community as well is very insightful. So I think being based in Singapore is a good advantage for a geopolitical strategist.
Coming back to the shift in great world powers, how do you tend to think about them in terms of investment themes at Newton?
At Newton, we think about geopolitics, or what we term great power competition, in terms of 5 sub-themes or key pillars. And the reason we try and break it down in a more structured way is because geopolitics does have a tendency to come across as quite nebulous, and sometimes it's difficult to see the wood for the trees because there's so much news flow occurring. So we like to think that our framework offers a way to separate what's important from what's just noise, and to be able to then make analytical decisions on the basis of what we're learning. So our 5 sub-themes, if you'll indulge me for a second to just elaborate on those, are the trade war, the tech war, the finance war, resource competition, and security competition. So they're the five sub-areas of geopolitics. So the first one, the trade war, that's thinking about how supply chains are adapting as a result of the changing pattern of trade. So since 2018, we've clearly seen trade become more politicized with tariffs and trade wars and more values-based notions attached to trade. And so we're clearly seeing and likely to see in the coming years an adaptation of supply chains and where investment is taking place. So that kind of covers off the trade war. On the tech war, this is really about a kind of decoupling of tech between the great powers, between the US and China, but also countries within their spheres. And we're seeing this right now, clearly play out in the semiconductor industry, where the US, is trying to prevent high-end semiconductors getting to China, and China really sensing that it's being contained and needing to build up its own domestic semiconductor industry. So we're likely to see these tech wars continue for many, many years, because at the end of the day, tech and innovation is what drives productivity, and that's what drives economic growth, and that's what's likely to be, the key growth driver in the coming years. So the third pillar is the finance war. This is about how the US has started to weaponize the dollar and the international Western payment system, SWIFT, in the wake of the Russia-Ukraine crisis. And we're seeing some of these autocratic countries really stand up and take notice and think about how they want to potentially protect their own financial systems or international payment systems from being the next target. So I think we're likely to see more finance decoupling. So that's the finance war. And then the 2 remaining ones, resource competition. This is about how resources or key elements and metals are going to be very strategic for future industries. When you think about the future industries like artificial intelligence or electric vehicles, you clearly need high-end semiconductors, and you need materials like rare earths, you need materials like lithium and cobalt. And so being able to control and have access to these resources is setting up for more competition. So that's the fourth leg. And then the final one, security competition, which I tend to think of as just, pure, good old-fashioned military spheres of influence, like we're seeing right now in the Ukraine, like we're seeing around the South China Sea. This is about, converting into an increase in defense spending. So all of these sub-themes of geopolitics, can be converted into takeaways that are relevant for investing. I think that's the key point to highlight.
What are the opportunities that each of these pillars present to investors?
Clearly, the way that the tech war is shaping up, we've seen the U.S. Senate pass the CHIPS Act, which will mean that over $50 billion of domestic funding and subsidies will be available for semiconductor companies that are prepared to invest in the United States. So clearly this is a very big, big sum of funds that is available for companies. So I think that there'll be beneficiaries that can tap into that are prepared to, put more of their R&D, innovation, and production in the U.S. Other areas would be within security competition. Clearly, much higher levels of defense spending are coming through now after Russia-Ukraine. We've seen NATO members, committed to spending 2% of GDP. We've seen Germany. I think Germany was at about 1.4% before the Ukraine invasion. So that just gives a sense of, that equates to around a 50% increase in their defense spending. Plus, they've set up a dedicated 100 billion euro defense fund to enable an accelerated catch-up. So these sums of money are, enormous and will find their way eventually into the pockets of the US, primarily the European defense establishment, but also I think more internationally, the US defense sector that has some of the best technology. And Australia, for its part, I was just reading that, the latest, most recent defense spending budget for 2022, 2023 equates to about a 7% increase year on year. So, Australia is not standing still either in terms of defense spending, which goes back to the point that I was talking about earlier with, I think the Solomon Islands and AUKUS and some of these other military initiatives that are intended to kind of counter China. So there are a few examples for you.
How do you make sure you're keeping on top of other geopolitical risks that might spark at any time?
Yeah, it's a great question because it's very difficult or almost impossible, I'd say, to predict specific geopolitical events and their timing. It's much easier to work with frameworks like I described to monitor geopolitical themes, things like trade disputes and tech wars that are kind of smoother but inexorable trends that are happening. Predicting the next event's very difficult. But geopolitical strategists have certain tools that they can kind of deploy. I like to look at history. I think that's very important to look at how the broader brushstrokes of history are kind of having parallels with things that are happening today. One example of that that I'd like to point to is how the great powers throughout history, going back over around 200 years, have always come unstuck in Afghanistan. It happened with the British Empire in the 19th century, happened with the Soviet Union in the 20th century, and it's happened with the United States in the 21st century. Eventually countries of these big powers have had to kind of realize that Afghanistan was becoming a drain. They were not making any strategic progress and withdraw. And I think a lot can be, pinned on the U.S. withdrawal from Afghanistan last year in terms of the geopolitics of 2022. I think it emboldened Vladimir Putin's consideration to invade Ukraine. And so, to answer your point, I think history is very useful to refer to. Other things, monitoring domestic politics, foreign policy is very often kind of an extension of what's happening in domestic politics. In the US, we've got, midterm elections coming up, something that is likely to lead to increased anti-China rhetoric, because that's something that appeals to parties on both sides of the aisle. So I think we should also be sensitive to domestic political issues, and it's no different in China, where they have the 20th Party Congress coming up, which is a major leadership summit for the Communist Party happening towards the end of this year, and that's also a very sensitive time in which foreign policy could be more volatile around that. And then in addition, also building in conventional macro analysis, I think geopolitics goes very nicely hand in hand with conventional macroeconomics. So right now, for example, you're looking at the emerging market landscape, and a lot of these countries have been very much affected by COVID and bearing the scars of the COVID pandemic. Their economies are not recovering particularly quickly, and at the same time, they're being hit with very high inflation levels for food and energy. We're seeing what appears to look like somewhat of a default wave moving through the emerging markets. It started with Sri Lanka recently as the kind of poster child, but there's a lot of other countries that are at high risk. I think the IMF or the World Bank have highlighted around 50 other countries that are frontier and emerging countries that could be facing debt distress. So that's something to keep an eye on, because if some of these countries start to default, or even worse still, become failed states, that will obviously have big implications for regional geopolitics as well. So that's another aspect of how a geopolitical strategist kind of deploys tools to think about the world.
Well, Richard, you've got a lot to keep you busy.
That's correct. I've got a lot to keep me on my toes and a lot to keep me occupied with.
Thanks so much for your insight today, Richard.
Thanks, Julia.
You've been listening to Richard Bullock from Newton Investment Management.